All right, I'm with Garrett Goggin of the Golden Portfolio. Garrett, how are you today?
Good, Robert. How are you?
Great.
Good.
What a week. I thought this was like gonna be end of August, a little sleepier. We had the Jackson Hole thing last Friday, and like everybody's gonna go on vacation. Nope, a lot's happening this week.
Yeah, absolutely, no doubt. We're starting at a seasonally strong period of the year. Usually gold consolidates during the summer and starts breaking out higher, in September. But every day is like Christmas for gold investors with Trump. Like there's news that come out every day. And over the past couple of weeks, it's about Lisa Cole. Bill Pulte, the chairman of Fannie Mae, is going after Lisa Cole for mortgage fraud. And now Trump is replacing her on the board. When Trump replaces her on the board, he already got Stephen Moran, the editor of the Mar-a-Lago Accord, on there. He's going to appoint another member. And then they're going to replace Powell. Like there's 7 members of the Fed governors. Trump's going to have 5 of them. Like he's going to do whatever he wants. And both Trump and Bissett have told you many times over, rates are going to 1%. And the dollar's going down. Stephen Moran, the guy that wrote the Mar-a-Lago Accord paper, that's what that paper was all about, weakening the U.S. dollar by using dollars to push up foreign currencies, which makes the U.S. dollar worth less. So, like, if rates are going to be at 1% and they're going to devalue the dollar, you can't own long bonds, right? Like, you're automatically going to lose money. Foreign countries have been stockpiling gold for 5-10 years right now, and it's increasing at a faster pace. They're choosing gold over treasuries because the treasuries, you're guaranteed to lose money. Now, if Trump wasn't in charge of the Fed and Powell wasn't in charge of the Treasury, the U.S. long end the yield would go through the roof. But we're looking at all sorts of new forms of QE that are coming in. The Treasury already started buying. They bought like $4 billion worth of debt last week, of long-term debt, when they're issued on the short end. They reduced the reserve requirement for banks from 4.5% to 3.5%, so banks can supply more long-term Treasury demand. And then there's been some stats regarding foreign holders of U.S. Treasury debt, and it's higher than it was a year ago. But you know who the number one foreign entity that had the largest increase year over year? It's the Cayman Islands. And it's probably the Carlyle Group, right? That's, manages Bush money, Cheney money, and Bin Laden money. It's a quasi.
Yeah, if I see Cayman Islands, I'm thinking like, hedge funds and private equity funds.
Yeah, closely connected to the U.S. government. Yeah, those are the only people buying that. All of our foreign trade partners, China's reducing. I think Japan's added a little bit. Japan's got their own issues, but no one wants to hold U.S. debt anymore. That's why gold's going bonkers, because we're at the part of the cycle, like long-term cycle. You got to own gold over treasuries that are guaranteed to lose money because they told you they're gonna devalue the dollar.
Yeah, there's some big factors at play right now. There's some seismic moves happening in the global macro backdrop right now, whether it's Russia or Ukraine or China. The Eurozone economies are ailing. We got data out of Canada this morning. Canada's in a recession very clearly right now. And then all the stuff with Trump and the Fed. Yeah, that just get your popcorn out for this whole Fed thing. I mean, it's crazy.
Yeah. In the Financial Times, they just had an article about it's the eve of the Federal Reserve banks. Like, they're losing their power. They're going to be the scapegoat, for the monetary inflation that we've been experiencing, since 1970, right? The Fed's going to take the fall. Jerome Powell's going to take the fall.
Yes.
The Treasury's going to have.
Trump has prepped Powell to take the fall.
Exactly. So the government's going to step in. Trump's going to, all right, we'll take care of it. We're going to lower rates 1%. We're going to manage the, long band, issue all debt on the short end. And where it leaks out into gold. Gold's that barometer for monetary devaluation. That's why gold's going bonkers. And if you look at I do some technical stuff too. I'm mostly fundamental CFA, but the technical stuff, gold is trading at a 50% premium to its 3-year moving average, right? Every time that's happened since 2000, it's tended to peak out. But now gold's starting to break out higher from that. The only period that you can look back to is 1980. We are like at the end of the US dollar as a reserve currency. We're looking at massively higher deficits, massively higher spending to manage the yield curve, and investors and foreign banks flocking to gold. These are like, we're witnessing history right now.
We are witnessing history right now. So you basically just laid it out. The Mar-a-Lago Accord playbook is playing out here at the end of 2025, and it's going to play out over the next several months and well into 2026. So that means you have to have exposure to gold and silver. You have to have exposure to gold and silver mining stocks. So I want to dig in to the gold miners, sort of the gold bugs, the monthly chart of the gold bugs, composite is breaking out, and it's getting close to levels that it peaked at in 2007 and 2012. So just want to get your thoughts on where we're at in this gold mining sector bull market.
Yeah. Pertaining to gold, gold's been consolidating for 4 months in like a bullish pennant, higher, lower high, higher lows, lower highs, and it's in a pennant. Right now we're breaking out of it. And it's been a long period of consolidation for like 4 or 5 months. And gold's at 3,500, which when 3,500 is the peak. When it breaks above 3,500, it's going to $4,000, like easy in 2 weeks. And what I'm seeing based on my experience, probably have a month or two pullback of 20%, 10 to 20%. And then based off everything that's going on historically and based off the historic comparisons, like gold's probably going to double over the next year from that point. But, I follow the fundamentals very closely, and I look at the miners on a free cash flow versus, enterprise value basis. And Newmont was trading under 50% discount to fair value at the beginning of the year. And I run regressions that go back 50 years. So it's not hard for me to look at that. I believe in data, probability, and statistics that say Newmont is extremely undervalued, and Newmont's going to basically double over the next, 6 months. And, I was right. People that follow me got into Newmont at like $45. And now it's, I don't even know, like 70 or something. But right now the miners are basically fair value or a little bit above fair value. But what happens with the market is, the only thing that pushes the share price higher is increasing free cash flow and earnings on a per share basis. So the gold's pushing more value into the miners. But then the market will either look at this free cash flow and value it at a discount or value it at a premium. And right now we've gone out of the discount to fair value. We're going into the premium stage. And we haven't seen much overshoot from that yet. That's the whole climbing the wall of worry thing that's going to be happening over the next 6 months when gold goes to 4,000 and the miners spike even higher. And then there'll be a certain point where, I'll look at these things on a free cash flow to EV. I'm like, based off the past 50 years of history, this thing's overvalued by 50%, and then I'll back off. But when Newmont goes up, doubles, my golden portfolio is focused on, number one, the royalties. The royalties are up 100% this year. Sandstorm got bought out. Origin got bought out. They're the best way to play the gold market by far. Fixed costs, limited management, free exploration upside. But then I have another portfolio, my 10X, that's got smaller explorers and developers. So, like a mine is worth the most at first production, right? Because they mine, the reserves drop, and then it gets closer and closer to its terminal value in year 10. And then a developer, the market cap should equal like NAV, the lifetime value of the free cash flow over the life of the mine at first production. Like I got Rio 2 going into production next year. It's a heap leach in Chile. They're like 80% complete. It's run of the mine, or they just got to lay it on the heap leach pad. It scales up to 80,000 tons per day. I run my model at 20,000 tons for like 5 years, 20,000 tons for 5 years. Like it's worth $3 billion. The market cap of the stock is still only 400 million, up around $400 million. Like we're like gold stocks and the developers have been going up with the price of gold, but they haven't closed that gap yet. I call it the golden anomaly, and it just shows the lack of investors in the sector. No new money has really come in. The GLD shares outstanding is low. The GDX shares outstanding is low. Gold is starting to get out there in the mainstream. We're seeing stories about Franco and Barron's. We're seeing stories about Franco in the Wall Street Journal.
Newmont and Barron's again. They wrote like their third.
We're not down the food curve yet, right?
No.
Real development stories. And then I don't know.
Barron's writes about, Rio 2, then we'll know we're at a top.
Yeah, exactly. But I don't understand why some private money, some outside gold money has not come into the sector yet to spend, say, 300, 400 mil to get $3 billion. That's a 10x return, So, I think the outside investors are coming. An interesting story is, Paul Singer, Elliott Management out of New York. He's a traditional financial dude. He manages billions. He's a gold bug, but he knows miners generally suck. They're cyclical. But he also knows that royalties are the best way to play it. So he started Triple Flag probably 5 years ago. He hired the CFO of Barrick, Sean Usmar, to run it. And now Triple Flag is one of the mid-tier royalties. He's built a great company and the stock is doing great. So, there's smart people that understand gold is a valid investment, and they're slowly but surely coming back into the sector.
Okay, so the last time we spoke, I believe, was at the end of April, and you were pounding the table on Newmont as you pounded the table on a bunch of stocks, and you were right about all of it. I think at that time, the Newmont share price was in the low 50s. Now it's $73 a share. But I got to think Newmont at like 75, 80 bucks a share. There could still be some upside, maybe 20, 30, 40% over the next 12 to 24 months. But it's probably not going to double. Just the law of large numbers. They can only grow their margins so much. They can only scale up so much. They're already at 6 million ounces a year. They're probably not going to get to 10 anytime soon. Yeah. So if we both agree, which we do, that we're still relatively early in this gold bull market, where do you want to be in the food chain? Do you want to buy the mid tiers, the juniors? Where would you put most of your capital in the sector?
Well, regarding Newmont, the overshoot would be at like $100 per share based off the current gold price and current free cash flow. And the market always overshoots. But one of the things, the miners are gushing cash right now. Good things happen to companies, to shareholders or companies that gush cash. They issue strong dividends, they buy back shares, they do accretive things with their cash flow to drive more value. But, Newmont's going under a cost-cutting thing right now where they're hopefully going to reduce their costs. But, share buybacks are big. When a company buys back shares, you got your profits on the top, you got your shares as the denominator. If you have strong profits, you can continuously increase profits on a per share basis just by buying back shares and keeping stable profits and, revenue and gross margin. So I see buybacks as being a tremendous driver to profitability, and tied into, this being more than like a cyclical event. This is like a different gold market right now. Like, what if, gold prices stay high? What if gold prices continue higher? It's truly a sweet spot for, the gold mining industry. But, if you want to measure investor sentiment and look at valuation, like valuation in general, right? The large cap miners generally go up and down with gold. They're cyclical. The thing that will mark the next top will probably be a massive multi-billion-dollar acquisition of one of the top development plays, like Ty Burt did at Kinross with Redback. Do you remember that one? Spent like $3.1 billion, ridiculously overpriced. They've turned it around. They're generating good cash from Cassius now, but it took them like 10 years. But that marked the top of the last sector. But we're nowhere near that now because the majors have been repairing their balance sheet, and they're still repairing their balance sheet since the last top in 2011. So for them to move from repairing the balance sheet to, turning it on to automatic growth, it's going to take a while. That's why I think we have a ways to go. But I just look at value. I try to buy the most free cash flow or potential free cash flow as possible for the cheapest amount of market cap possible. And the opportunities provided by, the developers, like you don't even have to go further down the chain into the juniors and explorers. It's that second trough of the Lassonde curve, right? And it's after they're fully financed. You get Montage. Montage is trading for, let me take a look at that. Montage has been one of my favorites for a while. It's traded about 1.3 bill market cap. They're going to be in production in 2026 as well. And the free cash flow, discounted free cash is worth $3 billion at this gold price. And
yeah,
I see it.
Montage is a beauty. I love that one, but they trade at a little bit of a discount because it's Africa.
Yeah, correct. Yeah, people don't love Africa. There's been some crazy stuff going on in Mali and all that.
Burkina Faso.
But I just see it I see it's all tied together. It's a measure of investor sentiment. Like when all the investor money comes into the market, the valuations are going to get pushed up. And I don't see any elevated premiums yet. All I see are discounts still. The gold price has done great. The miners have done good because they're just following the price of gold, but they haven't closed the valuation gap. Like Silvercrest Metals was one of my favorites. That thing peaked out in like 2021 when they first began production, where the market cap rose to a peak point where it was higher than expected NAV, and that peaked it out. The core acquisition brought it back there like 4 years later, but that was it. I've yet to find one developer that's going to be in near-term production that's trading anywhere close to NAV value.
Okay. So we both lived through and traded through the 2001 to 2008 gold mining sector bull market. I was a lot younger then, and so were you. But I'm looking at the charts and thinking back to that time period. And my analysis says we're probably somewhere in 2003 in terms of this bull market. What's your thoughts on this cycle, versus the 2001 to 2008 cycle?
Yeah, it's different because 2001, 2008, like Bank of England was selling the gold. It was a totally worthless asset trading for like $180 an ounce. It was totally neglected. That brought it off the map, and then it got disrupted by 2008, the huge global financial crisis. And this one's different. Gold's already at, $3,400 an ounce. It started from a much higher level. I believe where this is like a one in a generational opportunity bull market. Like it's end of the American dollar. It's, end times where, the stimulus gets poured on at an accelerating rate, and Trump and Bessent, are ready to do it. It's a different period. Yeah.
So as far as thinking back to that previous cycle, like 2001 to 2008 or 2009 to 2012, in those cycles, we started to see the gold miners stop moving up a bit early, right? So there was a divergence that occurred between the gold miner share price performance and the gold price. And that was, in both of those cycles, that was a bearish omen that we were about to roll over. This one, right now, the gold miners are accelerating their gains, and gold is, just as you pointed out a bit earlier, gold is just starting to move out of this pennant pattern. Would you look for that same correlation? Like if you start to see the gold miners not going up as much as the gold price or the silver price, is that a sign that we're topping? Or what would you look for in this cycle in terms of, okay, it's getting a little frothy, it's time to move to the sidelines or take some exposure off the table?
Yeah, it's It's a valuation study for me, right? Like I'm trying to buy the most free cash for the smallest amount of market cap. And when we get to a point where that free cash is trading at a significant premium to fair value based off 50 years of data, I'm going to start getting wary. But we're not there right now. The miners are fairly valued. The developers are selling at 70% discounts. Like, we're not there yet. And then, back in 2008, it took the gold market down, it took gold stocks down, but we lived through that. And, it wasn't good for us. It wasn't good for the economy. I really think the government learned from the lesson, and they're going to do everything possible never to let that happen again. And what we're seeing right now is an explosion to the upside in all asset prices. Because of Trump policies, and with Bissett in control of the Treasury and all the banks, if they see anything coming, they let Bear Stearns basically fail and Lehman fail. They're not going to let anyone fail. If any banks have trouble, they're going to step in and prevent that before we move to a crisis stage. I think we're going to see a blow off on the upside while the dollar continues to lose more and more value every single day, and gold's going to lead the charge.
Last time we joked about core mining being like the serial laggard of the sector. Have you seen the core mining performance since our conversation? It's almost a 3x.
Yeah, no, yeah, it has runs, it's got generational runs like once every 20 years. And then, what do they do with it? Then they sell more shares whenever their share price goes higher. A lot of people love these moose pasture, low grade silver miners where, they lose money every day. They have to sell shares every single quarter to pay management salaries. But yeah, they're going to have a big run. They're going to go up 3x, 5x, 10x. But when they go up 3x, 5x, 10x, management's selling shares hand over fist in order to, raise more capital to pay their salaries over the next few years. So, they lose money 99% of the time, and then they'll make money 1% of the time, and they'll make big money. That's what Sprott does. Sprott spreads it all over, and then he just waits for one or two of them to pay off big, and that's how he makes his money. I kind of do the opposite. I'm a value investor. I try to make money. I follow, the high grade stories that make money 99% of the time. You know what I mean? I'd rather make money on a daily basis. And then, we've seen, the high grade miners, those are the only ones that can generate significant shareholder value and drive free cash flow on a per share basis, including like Lundin Gold. Production's insane, costs are insane. That's the only way you can mine with low cost is if you have high grade. If you don't have the grade, your costs are always going to be elevated because ounces are the denominator. So I follow the high grade stores that make money 99% of the time. And if you want to roll the dice and you think this is that one in a generation bull market, based off 50 years of history, it's probably not going to be. But I got to agree, this time looks like it's different.
Yeah, CDE is incredible move. And yeah, back in April, it was really, really hated and really oversold, and it has outperformed big time. So let's talk about your golden portfolio, your portfolio performance in 2025, and just sort of a question. So you said earlier, you think gold's probably breaking out here, and it's going to go to 4,000 year term, but then we'll have a correction. Yeah. So if gold does break out here in the next few months and your holdings go up quite a bit, what's your strategy in terms of profit taking? How would you manage your portfolio?
Yeah. The way I manage my portfolio is my royalty is about 15 stocks in it. My 10X has got about 30. Like, you need to spread your bets out in this sector. Like any average portfolio, like 85% of your gains come from like 2% or 3% or 5% of your portfolio. So you're going to have losers, but that top 5%, you hang on to them for dear life. It's like Bitcoin, right? A lot of people in Bitcoin, they bought it at 100, they sold it. Well, me, I bought it at 10, I sold it at 200 to pay for my house, but never sell your winning assets. Always hang on to them. But based off valuation, if gold goes to 4,000, I think it's going to get wacky. I think a lot of people are going to be pouring into mining equities. I think they're going to push the valuations higher. When I see the valuation stretch a little bit, I'll be taking gains. I'll be taking, some gains from my winners. I will totally eliminate, ones that are still down, because if they don't participate in this bull market, they're never going to participate. So, I'll try to trade it a little bit. And I generally, I don't trade very much, invest for the long term, but, based off, what the gold price is doing, and based off what this breakout is doing, and based off where we are in the cycle, I'd be willing to take gains at that point.
Okay, and now let's talk about Hydrograph, Garrett. So this is a speculative stock on the CSE, and it did like a 19x in the last couple months. I know you have some thoughts on it. What is your opinion on Hydrograph?
I don't have one. I don't want to share. I'm not sure to share. I don't care at all. Like, I follow the gold miners and silver miners. I try to provide entertainment on Twitter to keep people informed and, happy. And that thing is just a crazy, crazy market right now between the short sellers and the people pushing the longs. And I don't have a dog in the fight.
Sorry, I just had to ask that one because it's been entertaining, no doubt. It's interesting because Bob Moriarty of 321 Gold sent me an email back in like May or something. He says, you got to take a look at Hydrograph. You should talk to the CEO. And I emailed her, but we couldn't make it happen. I guess it's my fault because I didn't follow up after she said she was traveling. And anyway, then all of a sudden, like, I don't know, 6 weeks ago, I opened my X account, and all of a sudden, everybody's talking about Hydrograph, and I see this stock just go airborne over a few weeks. It goes from 21 cents to 372, and that forced me to actually watch some of her interviews and to learn a little more about it, just because I had to understand what the heck was going on here. And I must admit, it's been an interesting trading vehicle the last month, and it's been interesting to watch this. I have no opinion on the technology, not my expertise at all, but it is interesting. And from a trader standpoint, which I definitely do, it's been very interesting. There's been some technical patterns in this one, including a recent double bottom, but it is volatile. It is wild. And there's very strong opinions on both sides, obviously. So we'll table that one for another day.
Based off my experience, like, I don't know anything about Hydrograph. I don't care. But based on my experience, the companies you see most highly promoted on Twitter are ones that you generally avoid. Why? Because good companies don't have to pay for exposure. They generate their own hype. They generate their own demand. So when everyone on Twitter is telling you to buy a mining stock, telling you to buy some other company, I've looked at many of them, and they've been, they've been trying to sell you stock, versus true value or, shareholder value creation. So I've generally avoided, the companies that are overhyped.
It's interesting because with Hydrograph, there is some controversy about that. Basically, there was a short report that came out that said all these different people or companies were paid for marketing, and it turns out most of them weren't actually. So there was some paid exposure that occurred, but generally speaking, I think the short report had some facts wrong about that. So, and this person that we won't name, who definitely made a bunch of posts about Hydrograph, he claims he was not paid. He's just a bull. He bought the stock. He has a big holding. He's talking his book, which we all do to some extent. So it'll be interesting to see how this plays out. Again, I have no opinion on it, but I am monitoring. That does bring up a very interesting conversation, though. So let's forget that stock. Let's talk generally about social media, and when a stock is being talked about a lot, whether it is paid marketing or it is organic, it's just the people who bought the stock are so bullish on it and they want to tell other people about it. Sometimes these things can have really powerful runs. And honestly, from my experience, when a stock goes from, let's say, 20 cents to $1 or $2, it's naturally going to gather a larger following, especially in 2025. We saw this with Bitcoin, the biggest example of how rising prices increases sentiment and generates a larger following. Some people will call it a cult following. This happens in mining stocks too, on a regular basis, where a price appreciation will create a cult following. when you see that, when you see a company is having a rising chart, getting more popular, does that just make you want to stay away no matter what? Or do you actually sometimes take a look and say, huh, let me find out more?
I like the quiet companies that have a good chart, collective mining, collective was Continental. I just added them, to my 10x portfolio. That stock's done great. Why? Because they're delivering like 7 grams a ton over hundreds of meters, and there hasn't been a lot of media hype regarding it. And then Lundin Gold's gone straight up, over the past 2 years. So, I'm not trying to buy the bottom. I like the companies that have come off the bottom and that are generating shareholder value through exploration. But stocks are different. Stocks are different from Bitcoin. They have inherent value. A stock's value is based off, the life of asset free cash flow. And if you're not generating value as at a company base, then the social media influence will just push the price too high. Like, you need to see the value being created, by the company. But with mining, it's through exploration, it's through free cash flow. So what the best companies are the ones that, don't have any social media presence, or you're not hearing much stories. And I look at them and I'm like, holy shit, like, you can buy $1 worth of free cash flow for 30 cents right now. Like Mag Silver is one of the highest grade silver miners. Like, it doesn't have any social media presence. It's got a small Twitter account, but they announced a dividend earlier this year. It was like an 8% dividend. I'm like, holy shit, this is like a silver miner paying an 8% dividend with one of the highest grade silver projects in the world.
Well, the big difference there is, like, Mag Silver doesn't need to raise money. They don't need to do a financing anytime soon. They have free cash flow, right? So their strategy in terms of marketing and talking to investors is much different than a company that's pre-revenue, right? Where a pre-revenue company is going to have to dilute. They're going to have to sell more shares to the market, and they need a larger following among investors. So when they do finance, it will be well received, right?
Yep. But you need an underlying project, with potential to support that.
Of course.
Like, a high grade project.
Real results.
So basically, don't put all your eggs in one basket. Stay diversified amongst a wide portfolio of pre-revenue projects. Hopefully 1 or 2 or 3 will be a home run, and you might lose money on the rest, but your portfolio will do great with those winners.
So you put you just added Continental Gold, or the symbol is CNL. You just added that to your portfolio this week, you said?
No, it was like a month ago.
Okay.
Yeah.
Now that's an exploration play. Now, obviously, that's a very high quality exploration play, but it is very pre-revenue. So what's your strategy there? Like, when will you look to take profits on that one, and how do you value that?
I'm able to build a resource estimate off mining results, right? And then I throw a mine plan on top of it. And I'm like, all right, it's going to run at 4,000 tons per day. It's going to be 80% of 7 or like 5 grams per ton. I look at nearby mines in Colombia. I say they cost about 350 mil to build a 4,000 ton a day operation. I look at the cost for, underground mining, and it's probably up near $300 per ton, and I model it. I go, this deposit's going to be worth, $1 billion, $2 billion, and I see the stock trading at 500 mil. So there's that valuation mismatch. I can put a number on what their resource is worth.
With CNL, that stock is now trading at a new all-time high. It's breaking out as we speak. It had a pretty sharp pullback there earlier in the summer. There was also a short report on that one that also seemed to have a lot of false data. In the short. So that gave the buying opportunity. That gave buying opportunity for those who did their own DD and saw through the FUD. So great pick there on CNL, Garrett. So I'll give you the last word. Tell us about how we can read more of your content and hear more from you.
Yeah, Golden Portfolio I started a couple years ago. 3 products, the Golden Portfolio. It's royalty-based. Royalties are by far the best way to invest in gold, better than coins, better than bars, better than mining stocks. Gold, all my portfolios are up about 100% year to date. And, you know, it's beating gold, it's beating the GDX. One thing regarding my portfolios, they're real portfolios. When stocks go in, the cash balance goes down. When I sell stocks, the cash balance goes up. You know, I track these things. You have access to them. I've audited performance. I brought in a auditing accountant who's got a business, and he audited my returns, and you know, they're valid. Other newsletters in the business, you know, they throw out the stock of the month club, and all they talk about is their winners, and they never talk about their losers again. None of them publish real portfolios. I've got, you know, the real ones. And then my 10x, 30 smaller explorers and developers, some of them extremely undervalued, up to 80-90% away from fair value. And then my GPIV, it contains 4 or 5 of my favorite top picks. That's my introductory product. It costs about $189. You know, that thing's up 300% over the past 2 years. And the thing that's funny about the IV is, you know, a lot of people sign up and they're like, oh my God, these stocks are up 300%, 400%. It's like, how can I buy that? I'm like, what do you want me to give you the stocks that are down 90% over the past 3 years? Do you know what I mean? And then that gold anomaly, gold has driven so much value into the underlying projects that, yes, gold's gone up. Yes, the stock price has gone up, but there's still a gap, a massive gap that gets wider and wider every day between the market cap of the company and the NAV of the company that's being pushed higher by the gold price. And that has yet to close.
That's a great point you just made. A lot of people have it the wrong way. They think they should buy stocks that are way down because it's a better value. And while sometimes that can be true, you better have done your DD and have some very good reasons for why that is, or why that price is about to change. Really, the stocks that have performed the best in the last 52 weeks are likely to perform the best over the next 52 weeks. And this is proven by data, backtesting. We have lots of data that proves it. And why would you want to buy the laggers when you could own the stocks that are making new highs on a regular basis and will continue to make new highs on a regular basis, right?
Yep, I'm there.
All right, Garrett, thanks so much for your time today.
Okay, Bob. Awesome. Thanks.